All right, everyone, welcome to the channel today. All right, so today I want to do a very quick sharing with all of you. Is regarding the Singapore T-bills, right? So if you've been buying T-bills, you want to watch this video, okay? So what's going on with T-bills and why is it to me is actually less attractive as an investment class already, right? So for those of you who previously saw my older YouTube videos, I talk about why T-bills in the Singapore context, right? The Singapore T-bills is so good. But right now, what's the issue here? All right, so let me just share my screen over here very quickly. All right, is that I think we need to move on with times, right? So I think this is where it is very important that everyone here as an investor, you must be flexible. So previously, I think Singapore T-bills was fantastic because we were getting like 4 point something percent. I think the highest I got was like a 4.4 or something like that, right? Which was pretty solid, right? For AAA graded government backed securities. But right now, I think it's not so strong. Right? And tonight, I want to talk about what is better than the Singapore T-bills and also the Singapore savings bond. Okay, so let's look at this, right? So the Singapore T-bills has kind of been dropping below the 4% mark at this moment, right? In fact, if you look at historically, what we can see is that the Singapore T-bills has gone up, but since then, it's not so great already, right? It's been coming down, and recently, we were consistently below 4%, 3.88, 3.93, right? So it's not that great. And how about Singapore savings bond, right? So let's take a look at Singapore savings bond, right? It's even worse, okay? So what you see over here is the February issue of Singapore savings bond. The average 10-year return is 2.9%. Now, some people might say, hey, 2.9% doesn't seem so bad, but take note, this is the average return over 10 years. So you can see at the front end of the curve, it is actually 2.76%, and then it gradually increases to 3.26%. That also means you will only see 2.9% if you hold for 10 years. Okay? All right? Only that. Yeah, I don't know whether sound effect works out, but okay, right. So otherwise, if you took out your Singapore savings bond early part, let's say we draw the curve here, right, it's something like that. Okay, so the 2.9% is kind of like the average over here, the 2.9%. So if you take out earlier, you take out here, mostly you're getting about 2.76, 2.8, right? And you can see the details over here. So I think Singapore savings bond is not that great an instrument after all. Okay, now this is where I want to introduce to everyone here the US Treasury bills. Okay, so this is something that one of my followers, Jeremy, on my Telegram group reminded me that it's possible to be done. And I went to do some digging and I want to try out myself. And it really kind of works. So why US Treasury T-bills, right? Is that US Treasury T-bills to me is almost similar to the Singapore T-bills, right? They are all triple rated, backed by a very strong government. And you can see over here, the return is vastly better. Okay, so even at a 3-month basis, you're getting 4.78%. If you go for a 12-month basis, you're getting 5%. And of course, if you go for the usual 6 months, you're getting 5.06%. Pretty good, pretty good. Okay, so then the next question is, how do we buy this? Okay, but before that, right, let's talk about FX risk. I think many of you ask me, hey Pete, if I buy US Treasuries, right, what about foreign currency exchange problem? Okay, so this is the chart of the US dollar versus Singapore dollars for I think the last 1 year. Okay, and you can see in the last 1 year before November, the US dollar has been strengthening and strengthening and strengthening very well. And recently, it has collapsed all the way down and then only just about getting a bit better. So I personally feel that it is a good time, to kind of like buy some US dollar when it's a bit cheaper. And it seems like the trend is recovering from here as well. Okay, so I agree there is FX risk, but I think given that the fact that US dollars is a reserve currency plus the Federal Reserve is still tightening, I think there are more room to go for US dollars to strengthen. Okay, so let's talk about how do we buy US Treasury bills. Now, there is it's not something like you can go to your bank account in Singapore and just click buy. Some of you may be able to do this through your premier banking relationship managers, but they're going to be quite expensive because they will charge you a truckload of fees. Okay, so how do you buy this in a very cost efficient way, right? It is actually using the interactive brokers platform. Okay, so for those of you who do not have an interactive brokers platform, I would strongly recommend you to open one because it is one of the most powerful platform, also one of the cheapest. But caveat later on, I'll talk about it, is that it is not the most user friendly. As you can see the platform screen over here, it looks more like a professional station. Okay, it looks more like a Bloomberg terminal than your standard brokerage that is very user friendly. Okay, but otherwise, this is a very powerful platform, very low commissions, and you get access to global markets. It is one of the widest market and includes the US Treasury bills. Okay, so if you want to, I will put a link in the YouTube description below, okay, and you can go and open an account for yourself. All right. So just a few things to take note, right? First and foremost, for US Treasury bills, the smaller amount that you can buy each is $1,000. So it's like 1,000, 2,000, 3,000. Okay, so the denomination is 1,000 as well. You can transfer your native currency. So for example, for me, I'm a Singaporean, so I'll transfer my money into interactive brokers in Sing dollars. Then on the platform, I can convert it to US dollars, right? Then I can go and buy the treasury bills, okay? And just one again, the US brokerage IB is not the most user friendly, so you just have to get used to it, okay? Now, how do you do it? Actually, very simple. So once you have installed the platform, you log in, right? Just go to the top right left-hand corner, the file, okay, over here, all right, and just click on new window at the bottom, okay, new window. So new window, you will see that there are many things over here. I want you to ignore all of them and go straight to scanner, okay? So when you go to scanner and then you will select bond scanner. So this will bring you to the tool that will allow you to search out all the US bonds, including treasury bills. Okay. So when you're there, what you can do is you can select US treasuries and you can just click search over here, right? Search for the US treasuries that you want. Now, after you have searched, you will come out with some results over here, okay, of different expiration date. You can see over here, different expiration date. And you just need to choose the one that you like, okay? Now, the unique thing about US Treasury T-bills is very similar to Singapore, is that you do not invest $1,000 and then you get more return. What happens is that when you invest $1,000, right, they will actually make you pay a lower amount. So the difference is actually your yield. Okay, later I'll show you the calculations, but just to let you know, in case you're wondering why you see over here the prices is not $100, right? It is actually 99 point something. Okay, all right. Now, this is where you can also see the yield percentage, right, for the treasury bills itself, right? This is an example that I pulled from the internet, and right now what I want to do is I want to show you an actual, real example over here, okay? So this is the actual trade that I sent in just before I do this recording, right? And it is not done yet because you have to wait for the market to open at night. But I want you to follow me through to understand how to calculate the yield they're going to receive from this. Okay, so you can see over here that this is a US Treasury bill, government T-bills, okay, that's going to expire on the mature on the 17th of August this year. Okay, so it's about 175 days away as of when I'm recording, and I'm paying a price of $97.6565 cents. Okay, so what does it mean? Okay, is basically the difference between $100 and this is actually $2 plus, right? So I take $2 plus, divide by my original capital. Okay, I'm getting about 2.4%. Now take note, 2.4% is not your annual yield. Why? Because your annual yield is actually a whole year. But in this case, I'm just kind of buying a bond that will last me, or the treasury bill, sorry, right? They will last me for 175 days. So you need to divide by 175 and then multiply back by 365. And you will see that the actual real yield of this product is actually close to a fantastic 5%. Okay, so it is way better than what you can get in the Singapore T-bills and even in the SSB. And I would even venture to say that this is way better, way safer than a lot of the banks' fixed deposit as well, right? Because fixed deposit do not have the flexibility to withdraw, whereas US T-bills is quite a liquid market. You can actually sell to the market quite easily. Okay, so that's all I wanted to share with you guys. If you are, like me, using T-bills as a way to accumulate your emergency funds, and for those of you who really want to, use the T-bills to kind of grow your spare cash, right? This might be an alternate option for you to consider as well. Okay, all right. So that's all I have to share with you guys, and I'll see you guys next time. All right, bye bye.